G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It's the 12th of November 2018. What an interesting year we've had. Can you believe that we're almost there? Just another 6 weeks till the end of the year or thereabouts, maybe 7. A big night on Friday night, but it's been an interesting weekend too. I'll talk about that first. Brexit looks like it's gone off the rails. Just when Theresa May was about to get the approval of the deal from Cabinet, take it to the Commons. So there's been pushback. The EU saying there's still work to be done. The DUP is saying that they've been abandoned essentially. Some others are saying that they're going to vote against it because they won't take a separation of Northern Ireland from Britain. Of course you wouldn't if you were of a certain bent in Britain. And so things have gone awry. Sterling is down a little bit, 129.20 odd this morning, so under pressure. The other big news, of course, is OPEC. OPEC had a meeting over the weekend, and it looks like they're going to move towards reducing production, or at least talk about it in 2019. Khalid Al-Falih, the Saudi oil minister, said that Saudi Arabia is going to cut by 500,000 barrels in exports next month, and that even though there was a build in the US, it's probably too early to say that it's a global glut. And we know that, there's a short-term versus a long-term thing here. There hasn't been enough investment in oil, it appears, so that we could face, based on current demand growth levels, we could face a supply deficit some point in the 2020s. Right now, we've got the financialization of crude really screwing with the actual market. And so you get these, big swings, and technicals are as good as anything, but you've got to listen to what the Saudis say. The Saudis have been really good at using their jawbone and using it at critical technical levels. I'll show you the chart, what I'm looking at. So anyway, around the grounds Friday night, S&P was down 0.9. Pete Navarro said any deal with China is going to be on President Trump's terms. We got PPI was slightly higher than expected. That put some pressure on CPI this week. I forgot to mention that in Markets Morning. Apologies. NASDAQ got belted. Concerns about growth, that kind of thing. 1.7% down. German stocks were flat. Rest of Europe was down. Asia under pressure Friday. Australian market under pressure. Likely to be under pressure today. Oil might get a bounce based on talk of a cut. We'll see how things go. It's Veterans Day in the US. Other similar days in Europe. So all a bit messy. Let's dive straight in. We'll talk about it. US dollar stronger. It's at 96.90 at 113.20. As the two key levels. Right, what do we got? Citibank Economic Surprise Index. I want to lead off with this because I just want to show what's going on at the moment. What do we got? We've got US and Australia and BRICS all with positive Economic Surprise Index. That means the data is better than expected. In the case of the BRICS, it's better than expected because it was so poorly expected. In the case of Australia, similarly, in the States, the fact that it's staying strong is just baffling a lot of people. Europe, absolutely terrible. Right, so what do you got? Policy and economic divergence. That's the key I always talk about, isn't it? So the Fed last week really did spook people because they didn't even mention the market turmoil. And what they did was they talked about the strength of the labour market, the tightness, the economy, blah, 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 all that kind of stuff. Now, what does that mean? It means that the positioning data that we're looking at shows still a very, very strong and long market of US dollars. Now, I raise that because as the market gets shorter euro and we get down at 113, the force or the impetus to go further is not there as much as if we were still long euro, the market was still long euro, or the market was only 10,000 short, or the Aussie dollar market wasn't close to the record for the last 3 or 4 years of shorts, but rather back up at zero or something like that. So the impetus, you need it. This is one of the reasons why the US dollar drifts until it gets a catalyst. The market's already there. The market's already there and ready for this US dollar strength. But the marginal buyer sets the price. So who's going to be there for the next buy? That's why CPI this week is so important. That's why the Fed last week was so important. It gave them a nudge. Now, this is as at last Tuesday. Released Friday, but as at last Tuesday. So you could probably infer from this that the market's a little bit shorter euro now. But one of the things you need to look at is just because there's a big long position or short position in the case of Euro, Aussie, yen and that sort of stuff, does not mean that the market can't actually move. And we saw that with WTI, didn't we? 12 weeks ago, oil was rallying, started to get stronger, and then it hit those highs, 76, 80 bucks, depending on 80, 85, whatever it was, depending on whether you're looking at WTI and Brent. Now we're starting to see it unwind. as it falls. It's fallen 22%, and they're still carrying a 400,000 long. These are the specs. So there is some danger there. But what I'm trying to show is that big positions don't stop a move, but they're a handbrake on it. So maybe we get a head fake down below 113. I'm targeting 111, 110, 108, 103, 104, eventually, possibly, maybe. But for the moment, we need that CPI to come in strong. If the CPI comes in strong, then the US can rocket. If it's weak, it's under pressure. But look at this. This is the premium. This is what it costs to short. Now, you know, if you're a trader, most of the people who watch this are traders, retail traders, that kind of stuff. The swap that you see, mostly a cost, but the swap that you see on your account each day, that incremental change in points, that's the cost of you holding a position, whether it's long Aussie short US, long Euro short US, or some other. Now, the cost of being short the US dollar is more expensive than it's been in quite some time. That puts an upward weight on the US dollar because it's harder to short it. Anyway, that's just some background things. Right, Euro, shoulder, head, shoulder, ugly shoulder that it is, but so what do we got? We got this level here. I'm still saying 112.80 for the break. I could draw a trend line across here. I'll draw it for you. That comes in about 112.20. I'm not so sure about this one, but it does look okay. It's about 112.20. It looks, obviously if 112.80 breaks, then we've got 108.20 as the medium-term target. So for me, the position I would hold, and one of the brokers that I'm moving my accounts to is getting a options portal, which is great. I would be a longer Euro put, 6 months, 108 strike, and I'm not going to hold it for 6 months. I'm going to ride the theta. Right, so I'm going to ride the time value, and then I'm going to ride the vol, and I'm going to ride the convexity in the vol. I'm going to buy it at 30 and sell it at 70 as it falls. Those kind of things. Anyway, so that's where my view is on Euro. Any rally 115, 116, just an opportunity to get a better set on the option, as you say. Dollar yen, sorry. And obviously it's Monday, so we're looking at weekly charts, folks. It's got to get up and through 114.54. Before it kicks on. 114.50.75 for me. If you can break through 115.75, then we're talking about 118. Now, the handbrake on dollar yen, of course, is stocks. If stocks start to fall and fall out of bed, as they might, the S&P's got to get up and through 28.23 for me to get excited. You can see this was this resistance zone across here. So 114.75, I'm not going to worry about stocks. I'm just going to say it's going higher. Because the US dollar is breaking out. But that's certainly, that looks, you know, if you could see that flat top and the wedge, just to be cautious. Just be cautious. Now, sterling, under pressure. Right, so it doesn't give you a lot. Let's just have a quick look at the dailies, right? So we had that uptrend, it broke, came back, kind of retested it, just broke. Now it's rolling over again. What about so what have we got? We've got a range. 133, 126, 60. I know the recent low was 126.90. It looks to me like it's going to go back there. What would I have for Brexit? Now, volatility is going to cost you a lot. I'd have a straddle. I'd own one. A 126.60 put, a 133.20 call. Something like that. More likely, though, if we don't get a deal, it's going to 120 or something like that. Would be tough. But at the moment, probably biased back towards 126.90, unless we get some good news out of Britain and out of Brexit. Aussie. So what have we got? I got bullish last week. It did look, you know, on a pure MACD basis, then we've got this push. But remember what I always say, the first signal is often a false signal. You need that second retest. Now, on the dailies, that worked really nicely, didn't it? Because he had 70-20, 70-20 roughly. And we had that first big MACD dip, and then the second one was shallower, and then we rallied and we got up to 73 cents. Now, it's really important that the high in the Aussie last week was 73. Now, we know that the RBA is all bullish and saying don't worry about the wealth effect and that house prices are just easing and all that sort of stuff. Auction results are down again. Now, there's 14 charts in Markets Morning this morning. I really do urge you to have a look. If you're just a viewer and not a subscriber, please subscribe. The link's on my Twitter handle, @GregoryMcKenna. Anyway, what we've got, right, is we got a failure at 73 cents again last week. This thing has to take out 73.14 to really kick on. 73.14 was the high 2, not last week's FOMC, the FOMC before that. It's got to get through there to kick on. That's a point I didn't make strongly enough last week because I got excited about 74.40. So I apologise. What have we got this week? This is a big week for Australia. We have NAB Business Survey. The single most important thing that I watch in Australia each month is the NAB Business Survey. Then we've got the Wage Price Index and the Westpac Consumer Sentiment, and then unemployment. Tuesday, Wednesday, Thursday, all those 4. That's really going to tell us whether the RBA has got their head in the sand, is pretending that there's no impact, or whether people like me who are worried about consumption are too worried. It's really important, those 4 data points. Now, of course, we've got China's triple treat and all that kind of stuff. That's going to drive the Aussie. And, of course, the US dollar's move is going to drive the Aussie. If we can get and hold above a 73 close, you can run to 74.40. If not, back towards a retest around 71.20.30 of this line. I was saying last week on the dailies, I think it's going to retest. It never did. Now it probably will. You don't always, but you often get a retest. So big week for the Aussie dollar. The CAD looks like it's breaking higher. And if you have a look at it on the dailies, you can see it's really starting to break higher. So on the weeklies, it's starting to break higher. 132.25, we're at 132.04. Hold above 132.25 and we're off. We're talking about 133s, 135s, those kind of things. Oil, if it bounces back, if Khalid Al-Falih and his buddies can get something done, then there's a 0.8 something correlation on a 35-day basis. 0.8471 for dollar CAD and oil. So inverse, obviously, because it's dollar CAD. So anyway, keep an eye on that. Kiwi. So Kiwi, this is a bit like the Aussie. So the Kiwi had that break, that reversal, then that break. It's pulled up right where it should have. That 68 to 68.5 zone has been pretty solid support resistance in the past. It proves so again. Kiwi has to get up and through there. Chances of a Kiwi reversal are there. There's no real technical sign that says the Kiwi is going to come back. I would like to see it close above my 30-day moving 30-week moving average at 67.50 by the end of the week to get bullish. As it stands at the moment, it's pulled up in resistance. I wouldn't be long unless it gets the other side of that 68.5 resistance in a structural point of view. If I have a look at commodities, so if I extend this, it's about 11.97 or thereabouts, I think. So 11.95, 11.97 looks like support for gold. It's the interesting thing about gold is gold got belted, obviously the US dollar, but gold got belted Friday night even though stocks were down. And there had, in October, emerged a pretty strong correlation between gold and stocks. Gold got a bit as stocks got offered. It's only one day, but that broke down on Friday. So just keep an eye on that. If stock starts to fall, I'm going to expect 11.95 to 11.97 to hold for gold. If it doesn't, it sends a really big story about a break lower back towards 11.80 or 11.60. Silver needs to hold 13.93, folks. If it doesn't hold 13.93, then I'm looking at sort of 11s and 12s. It's got to hold it. That's the range at the moment. In terms of copper, copper's in trouble. Where is my copper chart? It's 264 is the level it's got to hold. Otherwise, it falls back towards 255. If you take a dispassionate look at that, it looks very different on the dailies. But if you take a dispassionate look at that, you'd probably argue, maybe, that if 255 gives way, we could see $2. Now, fundamentally, can I see $2? Nope. Is China slowing? Yep. Could the trade war continue? Yep. Peter Navarro said the deal will be on President Trump's, conditions, if I could put it that way. We have to wait and see. But, you know, if that's a shoulder, that's a head, and we get a breakdown through there, could get ugly. But that's not forecast at the moment. The forecast at the moment is 255, 286.5. A break either side will see the run. So I'm just trading that range. And 264 is the short term on the dailies. In terms of oil, WTI and Brent. So this is the... Now, if this was just the trend line, I'd be saying it's two touch. So this trend line coming up at sort of 57.5 is only tentative. But the fact that it's a two touch, but it's also got a two touch as the tops, suggests to me that people are looking at it. So this will be a chart on many traders or this will be a channel, I should say, on many traders' charts. So what do we got? Last week, I got cautious. You know, for some time, I've been ratcheting down. I said 64 and 74 ages ago. Then I said if they broke, we've got 70, 60 and 70. Mission accomplished. And I did say that I thought that we might see something from the Saudis. That's what we're starting to see. They're very good at this jawboning stuff. This whole rally has been predicated by the Saudis and the rest of OPEC using the jawbone at critical technical levels. So maybe it's got to fall to 58. Maybe it's got to fall to 57.5. Maybe I'm just too cautious. But I'm expecting some sort of support to maybe come into the market pretty soon. So we'll keep an eye on that one. In terms of Brent, Brent doesn't have the same sort of setup. If I can find my Brent chart, you can see Brent has already broken through that one, and this one is like miles away. What's important about Brent for me, remember this, right? We had this, then we had the pullback, then a break, and it was forecast to run to a certain level, which it did. And so now we've broken back into this range. So are we now back in a 62, 71, 72 range, or are they going to try and drive it back up to 80s? I'm not sure. I don't think the Russians are uncomfortable with Brent as a better benchmark than WTI, or a more global benchmark, I should say. I don't think the Russians are uncomfortable necessarily with oil down here. So we might get a close in the WTI Brent gap, perhaps. I'm not sure. But in many ways, it's easier to be bearish this chart and suggest that maybe we might even see 62 on my weekly chart scan. Where is it? There it is. I wrote $60 as a chance for Brent. Probably not right away, but it is a chance. Righto, looking at stocks now, and I'll get the skates on so I don't keep you all day. S&P 500. There it is. CFD base. What do we got? So we're constrained here, folks. On a weekly basis, we've had a first leg down. You probably had a second leg up, and you might have been in for a third leg. Now, I'm not an Elliott wave guy. I use Fibos, but obviously anybody who uses Fibos is closely tied to an Elliott wave guy because they're always, doing that. But I'm not into the count counting thing unless they're obvious. And in many ways, this possibly could have been wave 5 since the 2009 low. So we'll have to wait and see. But for me, it's got to get up and through 28, 23. It's trying to rally. It's still, if I was looking at this, I'd still, in normal circumstances, and remembering it's a second signal. First signal, then we made a new high, but we didn't get that gap, so that momentum wasn't there. The volume was there on the lows, as it was here. So the buyers did come back, but 28.23, I'm happy to be short unless 28.23 holds on a closed basis. In terms of the other markets, don't think I've got an, there it is, good. Right, so this is the NASDAQ 100, similar sort of story. It's not really going anywhere. It still looks like it's biased lower. You'd have to take out last week's high to get really bullish, and last week's high, of course, was 72.29, so a good 200 points above where we are. 68.64 was the low. So to me, I look at that chart, I say 65.16 is probably more likely than not to be a target for me and somewhere where I think it will trade. If I have a look at the local market, I don't know where all my trend lines are gone. Doesn't really matter, I guess. We can have a look at it in this manner. So the key, if you recall, that I was talking about some time ago, it's probably too low. Oh no, it might be all right. Was so that's 5587. I said 5990 to 6000 based on the dailies, but you can see this support here too. At 5599, yeah, that's right, 5600. So you can see the support here. That's the level. If it breaks, we're shot duck. But it's not at the moment, is it? It's got to get up and through 5933 for me to kick on. Now that looks like a classic base. We've got some volume come in. We've got stochastics turning up. We haven't got a signal from the MACD yet. But if we get up and through 5933, we would. While below 5933, I would suggest that potentially lower levels beckon. But if it gets up through 5933, then I'm a feather duster, not a rooster. The DAX. 20 minutes, gee whiz. I better get skates on. Gee whiz, I'm sorry, folks. I'm just going to say it can't get through. It's 11.7 is the key, then 12.2 maybe. That's about it, right? I'm going to leave it there. Bitcoin's doing nothing, folks. I'm sorry, 20 minutes. Lots of good data. Have a look at markets mornings every day. I'll keep you in touch. I'm going to say goodbye. Leave it there. Thanks for watching. Any comments? I do appreciate your comments, and I respond to every single one. Thanks very much. All the best. Bye for now.